from what we want and what we get is always two different things.
Obviously.
The best backdrop to crypto would be further economic weakness, and the marginal propensity for the balance sheets of the central banks to increase. That would be positive crypto and would certainly extend the cycle further than people imagine. And that's potentially on offer here, but it's far from a certainty. You've created alignment of incentives. So with Facebook, you and I could use Facebook, WhatsApp, Instagram, and connect with our friends, grow our businesses, do all of those things. But we didn't directly participate in the network unless we own shares. But in a crypto protocol, you participate in the network too. So you're highly incentivized to grow the network or protect the network. And that makes it super fast adopting, which is why it's the fastest adoption of any technology in all recorded human history. When I started saying the chart of Ethereum looks like it's going to outperform Bitcoin, I got immense hatred. I was like, okay, what's this all about? And I started to try and understand, okay, how do we price Bitcoin? How do we think about it? And I stumbled across Metcalfe's law. And it made total sense. You know, I just think of this whole space as essentially behavioral economics. You know, what you're doing is you're creating a network of people and incentivizing them to grow the network. So I understood that. And Metcalfe's law was basically that. And then when I figured out it actually applied to Ethereum in exactly the same way, I then realized it applied to everything in this space in exactly the same way, that it was all just network effects. And that gave me something to hang my hat on, because I could then understand what was driving the market, how to think about valuation, what was a good project, what was a bad project. It was all about network effects. And I even learned to question what people think of as network effects by just stepping back and saying, okay, what drives the network? It's the number of nodes, the number of connections, you know. Now, what happens if you have a network that's very one-sided, which is just the number of nodes? So investors in this case, or token holders. Well, Bitcoin's a bit of that. It's quite one-sided still. But there are protocols, and there are applications being built, and Lightning Layer and other stuff. But I looked at Doge, which was this meme coin. And I thought, I don't really understand this, but millions of people own it. And my thought process was, well, what happens if somebody builds applications on it? Then you're making the network valuable, more valuable. And lo and behold, Mark Cuban saw that too and said, I'll accept it for Dallas Mavs stuff. Yeah, that's a small thing, but it was a meaningful statement that a network can come any way. It can come from amazing applications like Ethereum, or it can come from a loyal ownership base. And Elon Musk then started on the whole process. Now, I don't know whether Doge ends up building true network effects or not, but it's interesting, and I've kept my mind open to what this all means.
And you basically observe that the same network effects that made, let's say, Facebook, Instagram, Twitter very popular can be replicated or are replicated in the crypto space.
Yes, and they have a propensity to move faster, which is why it's outperforming the internet, because you've created alignment of incentives. So with Facebook, you and I could use Facebook, WhatsApp, Instagram, and connect with our friends, grow our businesses, do all of those things. But we didn't directly participate in the network unless we own shares. But in a crypto protocol, you participate in the network too. So you're highly incentivized to grow the network or protect the network. And that makes it super fast adopting, which is why it's the fastest adoption of any technology in all recorded human history. People didn't want to believe it because they wanted to believe the narrative of Bitcoin or the narrative of Ethereum or the narrative of certain things. So people anchor themselves on particular narratives, and they don't like it to be exposed as something somewhat different. The narrative, everybody has a different narrative in the end, but the network represents all of that. So it actually started to resonate. People started to go, oh, I get it now. This is this is what it is. And I think I probably made Metcalfe's law mainstream for people's understanding of what this was about by sheer determination of telling people, look, this is what it is. It's not just about the uniqueness of a protocol. It's like, do other people perceive it to be unique, and can they create applications on it?
How do you make people understand that it's not about being right, it's about like giving some directions in which people should look?
I try and get that across, and I never speak in terms of certainties. So why did I have that projection of Bitcoin? It wasn't an emotional projection. It's like, okay, Bitcoin is following very similar past patterns to 2013, 2017. So we have a contextualized understanding. We can put it within the logarithmic trend, and it would extrapolate being about one standard deviation overbought at around those levels, and that would be correct with the trend. We also know that it's trading probably below Metcalfe's law fair market value right now. And we also have observed in the past that the last quarter tends to be quite strong. In fact, very strong. So the balance of probabilities are that you're going to have a good run. Is that a certainty? Far from it. Does that make me want to increase my position? Well, I've been increasing it ongoing anyway. So it didn't change my framework. My framework is not about the end of the year, what price it hits. I've also, noted that the market has a tendency for maximum pain, which I've talked about in other podcasts. And, maximum pain is we all believe one thing, then the opposite is likely to happen. And I step back and look at it and think, who is the marginal driver of this market right now? It is not retail. Why not? Well, the wallet addresses, new wallet addresses and stuff are below highs now. And I think it's to do with this consumption issue. You've raised prices on retail in terms of fuel, energy, fixed costs. So their marginal ability to invest has gone down as well as to consume. So you've taken marginal money out of the market. So if you've taken them out a bit, and then the institutions are at the year end and they're incentivized differently, again, they're not saying they don't believe in the market. They're saying, I believe in getting paid. And so I want to protect my profits. I get it. It created a lopsided market. Now the question is, are they done? It looks like they're done because the market has been kind of just chopping around since last week, which was the traditional last week of everybody, squaring their books. Could it have another leg lower potentially? Could that come out of Asia, which is where a lot of the selling has also come from? Again, possibly. But the probability is that next year ends up being a strong start just because capital gets put to work.